이렇게. What's up, y'all, everybody? This is Sunko, the Korean bro. Today is 2022, December 13. Today what I'm going to do is read articles from various news articles, stock articles to be exact, and it's going to be really fun. Okay, I'll be reading stock articles a lot today because it's been a while since I read stock articles last time, so I'll be talking out loud. Okay. Okay. So first, let's see. Okay, let's see. Let's go to mollyfood.com. A recession could be coming in 2023. Here's Warren Buffett's investing advice. Why RH stock is looking absurdly cheap. 3 chart you need to see before buying BlackBerry stock. Add some flavor to your 2023 portfolio. A bull market is coming to stocks you wish you own when it does. Okay. A recession could be coming in 2023. Here's Warren Buffett's investing advice. Warren Buffett's Berkshire Hathaway has generated superior returns since the company really comes life in 1965. Buffett has lots of experience, having been through a range of recessions. If you've listened to any pundits, analysts, or economists, you know by now there is a good chance the U.S. economy will tip into recession either next year or in 2024. How severe the recession will be is anyone's guess after the Federal Reserve just conducted 4 consecutive 0.75 percentage point interest rate hikes. Investors are finding themselves in uncharted waters, especially as the Fed also unwinds its massive balance sheet. That said, investors should prepare for what is to come. Legendary investor Warren Buffett, whose company Berkshire Hathaway has wildly outperformed the broader market over the last 7 decades, has seen a recession or two in his day and has the experience many retail investors lack. Here's Buffett's advice for investing during a recession. Think long-term, invest in smart assets. Timing anything in the stock market can be quite difficult, and that includes recessions. It's also quite possible recession will occur before anyone knows and won't be declared until it is well underway or over. So you never know when it is going to come, and nobody can get it right. Nobody can time it. So it's not like it's declaring that I'm going to come, right? So the moment that you find out that it's a recession, uh, is either it's underway or it's over. Okay, so recessions also happen more than you might think. Having one every decade is not unheard of. That means recessions are often part of investing. And if you are investing long term, you should expect to run into one sooner or later. But Buffett has always advised investors to keep a long-term outlook in mind because short-term volatility and earnings struggles are quite typical. If you invest in a company with strong fundamentals, it will likely improve and drive record earnings 5 or 10 years down the line. So this doesn't mean you can't help yourself by investing in smart assets. Buffett likes what he refers to as productive assets, like farms and real estate, which are tangible and generate lots of cash. Buffett has also advised people not to make things more complicated than they need to be. For most investors, simply investing in an index fund tied to the S&P 500, which has a track record of performing well long term, is really all they need. Think opportunistically, okay? Despite some of his more conservative advice, Buffett has always advised investors to look for opportunities during a recession. Be fearful when others are greedy, and greedy when others are fearful. The Oracle of Omaha has famously said, and his advice makes sense because all recessions are temporary in nature and have always been followed by new market highs eventually. Recessions offer investors rare chances to buy stocks when they are at lows and trading at cheap valuations, and they reap the long term rewards. Buffett has followed his own advice many times before. Take Bank of America. Berkshire Hathaway's second largest position in its large equities portfolio. Buffett first invested in what is now America's second largest bank by assets in 2011, getting $5 billion of preferred shares and stock warrants, allowing Berkshire to purchase hundreds of millions of shares of Bank of America's common stock at $7.14 per share. Fast forward to the present, shares of Bank of America trade for more than $32 per share. And that's after the stock is down close to 30% this year. Okay. Heed Buffett's advice. With a potential recession looming, it can be hard to stay calm while in the moment, but do your best to follow Buffett's advice. If you've done really good due diligence on a stock, but the market has sold it off intensely this year, stay the course if you still feel good about it. Chances are it will bounce back. If you've done really good due diligence on a stock, but the market has sold it off intensely this year, stay the course if you still feel good about it. Chances are it will bounce back. If you have some cash to deploy and see some really good op, opportun, opportunities, don't be afraid to go for it. Also, don't be afraid to admit you are in over your head. And instead of individual stocks, put cash into index funds long term. These will likely serve you well. Lastly, always remember that recessions, while painful at the time, have always been temporary and followed by new market highs. Stay positive and keep the faith. Something big just happened, okay? So, uh so don't be afraid to go for it and think opportunistically. So when recession comes, that's the moment that you can grasp. Mm. That kind of opportunity hardly comes. So so go for it. Don't be afraid. when people are mm, when people be greedy when others are fearful, and be fearful when others are greedy. The Oracle of Omaha has famously said, I'll have to keep that in mind for real. Be greedy when others are fearful. So those three statements are what I have to remember. Think opportunistically and uh, think long term in smart assets. Okay. Why are stocks looking absurdly cheap? Okay. RH sales and profits fell in its most recent earnings report. CEO Gary Friedman laid out a far-reaching vision for the company's future. Uh, the stock looks incredibly cheap at a price-to-earnings ratio of 9. Hmm. Hmm. All right, CEO Gary Friedman has never been one to mince words, and he didn't let investors down in the latest earnings report. Friedman said that the housing market has collapsed on recent earnings call, and the company's results show that it has quickly gone from enjoying pandemic era tailwinds to suffering the opposite. High mortgage rates have soured demand in the housing market. Let's see. The long-term focus, the valuation disconnect. Since this company is not the one that interested in, I'll just skip it because it's a furniture company, and I'm not at all interested in furniture. Let's go over to next one. Hmm, okay. Teladoc Health is the company that I'm really interested in because it's the mm, future of medicine, future of doctor, and future of hospital. Uh, Doctor can treat patients remotely in the near future, and this is the company that uh, deals with it. So to be exact, I truly believe the future of telehealth. Let's see. Let's look at this in detail. Okay, 91% below its all-time high. Let's look at the chart of telehealth first, and then let's go over to the details of this article. And mm, okay. First, its current price is 28, which is relatively low compared to all-time high, which was 263, which I think is crazy because in the year 2018, its revenue was 417.91, whereas in the year 2021, its revenue is $2.03 billion. Hmm. In the year 2018, $417.91 million of revenue. Uh, let's look at charts. 2018. Okay. 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 Let's read this out loud. Okay. The first phenomenal growth stock that has the potential to double your money in 2023 in spite of the Nasdaq bear market is a healthcare stock, Teladoc Health. The COVID-19 pandemic winner has lost 91% of its value since peaking in February 2021. Hmm. Skeptics have two issues with Teladoc. First, they're clearly concerned about the potential for virtual visits to be a fad. There's uncertainty as to how quickly Teladoc can grow once the pandemic is officially put into the rearview mirror globally. So, what people are concerned of is that when pandemic era finishes, uh, would they still get try to get doctors help remotely? Uh, People worry that patients will go to hospital to get treatment, but will it? Hmm. The other issue driving skepticism is Teladoc's massive 2022 losses, tied to its overpriced acquisition of applied health signals company Livongo Health. Majority of this 18.5 billion purchase dollars has been written down this year, resulting in the company registering a loss per share of more than $61 through the first 9 months of the year. That's not the best way to impress fundamentally focused investors during a bear market. Okay, since its acquisition of applied health signals company Livongo Health, it lost a lot of assets. What people couldn't think of was that its potential once it uh, if this company um finished the acquisition of this company, this could they could potentially grow more. Uh, but what people are worried about is status quo. The current asset they have. Yeah, here it says, however, there are a couple of things investors should realize about Teladoc that could drastically change the view of the company. To begin with, virtual visits are anything but a fad. Hmm. The 6 years leading up to the pandemic, Teladoc averaged 74% annual sales growth. So, starting from the year 2013 to 2019, Teladoc averaged 74% annual sales growth, which is uh, relatively high compared to the one that I can think of from the other companies. So, what this demonstrates is that the company's services were transforming personalized care well before COVID-19 arrived on the scene. So, okay, let's read this out loud again. Planet 13 holdings 86%. Um, Another key point is that telemedicine is an improvement for all facets of the healthcare treatment chain. Telemedicine. So, uh, treating patients remotely and giving patients medicine remotely. They are two services they provide, and it's more convenient for patients. It gives the physicians the ability to keep closer tabs on chronically ill patients. And the likelihood of improved patient outcomes means less money out of the pockets of insurers. So, what this author says is that um, if they can treat patients remotely and if they can give medicine to patients remotely, they can chronically check on them, and it's likely that they can find they don't have to spend much money. They don't have to waste their money mm, on the medicine that's not working. So, mm. But the most immediate catalyst for Teladoc will be putting its one-time acquisition-related expenses tied to the Livongo Health in the rearview mirror. With considerably cleaner income statements in the new year and a services platform that can sustain 20% sales growth, Teladoc Health doubling 2023 isn't out of the question. So this author clearly Planet 13 Holdings 86% below its all-time high. Okay, Planet 13 Holdings. This company is all about marijuana stock, which I think is temporary one because the current Biden administration supports marijuana, so marijuana companies these days have mm, increase in their stock price. But since I'm not really into marijuana, I would just skip it, and instead I'll just focus on IT. Okay, two semiconductor stocks to buy hand over fist in 2023 and one to avoid like the plague. So, yeah, this article is what I tried to read last night, but since I didn't have much time last night, I'll just read this one right now. The first sheet maker that's a surefire buy in 2023 is industry stalwart and Dow Jones Industrial Average component Intel. As with most semiconductor companies, inflation and supply chain issues have taken their toll on Intel in 2022. But in addition to these concerns, Intel's share price has been weighed down by chief competitor Advanced Micro Devices, chipping away at its share of central processing units sold in personal computers, mobile devices, and data center servers. Hmm. Hmm. So Intel compete against advanced micro devices, and mm, if it was not for advanced micro devices, the revenue of Intel would have grown much faster, right? Hmm. While these are all tangible headwinds, none of them are particularly concerning over the long term, or risk of derailing Intel's turnaround strategy. Okay. Okay, let's read. Foundry segment. Mhm, 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 mhm. Let's look at chart of Intel. Mm, okay, 28.69. Mm, 28.69. Oh, Splunk. Hmm. Splunk shift. Okay, one monster growth stock to buy hand over fist, according to Wall Street. Splunk's shift to the cloud is ripping substantial rewards in terms of growth. The company is effectively managing costs and it drastically shrank its net loss in the third quarter. I listed Splunk on my portfolio, but then I skipped it last time because I'm not really familiar with this company. But let's see. The professionals on Wall Street. It this is Wall Street peak, just so you know. So don't always get things right, but when a clear consensus emerges, it's worth paying attention. So a lot of Wall Street and analysts uh, pick this one as the potential one. Okay, a group of analysts tracked by the Wall Street Journal is collectively very bullish on Splunk, a machine learning powerhouse that is chasing $100 billion market opportunity. Okay, the company just released its financial results for the third quarter of fiscal 2023, and it revealed red hot top line growth with a drastic improvement in its bottom line losses. Here's why Wall Street is backing Splunk stock and why investors should consider following its lead. Okay, we all know what is cloud, and we all know the future of cloud, right? And what they're doing is take machine learning to the cloud, uh, which is like the top level, top tier, mm, like high technology, top tier high technology. Okay, anyway, Splunk has developed advanced machine learning technology to help businesses draw unique insights from their everyday operations and customer interactions. With the onset of cloud computing, more organizations are conducting business online and generating mountains of data is a side effect of that shift. Okay, what I get is that they help you gain insights from your business. Uh, a lot of people and a lot of companies are doing their business online, and of course there's got to be a lot of transaction, and with that transactions people can gain insight, but with the help of this company people can gain insights much easily, more easily, uh, with uh, mountains of data. Splunk's specialty is ingesting the data in real time and producing actionable information. Take the McLaren Formula One racing team, for example. It uses Splunk to analyze the live data produced by each of its cars in a race environment to draw insights instantly that it can use to make critical decisions. So, for example, in a Formula One racing team, by using real time data, they can actually make better decision. Hmm. It's what this article says. Splunk is in the midst of a seismic shift in its business model because it now offers its services in the cloud so customers can access them from anywhere. As of quarter three, anyway, let's look at chart first. Splunk. 92.16. Its all-time high was at 219. And full-time employees 7,000. Software infrastructure. Its headquarters is located at San Francisco. Let's go to Splunk.com website. Okay. The Unified Security and Observability Platform. Okay, how we help you turn data into doing. So, okay, our extensible data platform delivers unified security, full stack observability, and limitless custom applications. Logs, metrics, traces, on-premises data centers, third-party tools. Okay. Okay, blah blah blah. I'll just I think I have to look at YouTube to see what they really do. Okay, a data platform built for expensive data access, powerful analytics, and automation. Okay. Hmm. Anyway, Splunk is in the meat of a seismic shift in its business model because it now offers its services in the cloud, so customers can access them from anywhere. As of quarter three, it had a 380 customers spending at least $1 million annually on its cloud-based platforms, up 40% year over year, which is twice the growth rate of its non-cloud customer additions in the same spending bracket. So compared to non-cloud customer additions, they had a mm, what is it? Hmm. They had more customers, right? Up 40%. But there are now three prongs to Splunk's business: the flagship Splunk platform, plus Splunk security and Splunk observability, the combination of which presents $100 billion addressable opportunity. So let's see. So Splunk platform, Splunk security, and Splunk observability. Mhm. Okay. So let's get to bottom line. The Wall Street Journal tracks 40 analysts who cover Splunk stock, and 23 of them have given it the highest possible buy rating. Okay. Five are in the overweight camp, while the remaining 12 are neutral. Most notable is the fact that not a single analyst recommends selling. So out of 40 analysts, um not a single analyst recommends selling. Okay. Splunk stock currently trades at roughly $91, but the average of Wall Street's price target is 113.66, which implies an upside of 24.6%. Hmm. Okay. Splunk is a quintessential company of the future, and it's now making all of the right financial moves to deliver positive earnings for investors. Its stock is down 59% from its all-time high, but if Splunk continues on its current trajectory, that discount is unlikely to last much longer. Given the consensus backing from Wall Street professionals, investors might want to buy now. So this author points out um, that because of macro headwinds, uh, its stock price is now low. But after its headwinds is gone, and after they get over this uh, pandemic era, then it would go upward anytime soon. It's what this author says. Okay, let's briefly go over what I just read. Splunk is the company that mainly deals with real-time data, and what they also provide is a security and platform. Um, what was it? The three services they provide were uh, mm, mm. Splunk security, observability, and platform. Okay. Quite difficult. And let's go over to next one. What is it? Okay, let's read this one. Amazon. The bull case for Amazon. Okay, the bull case for Amazon. Just so you know, I invested into Amazon because I truly believe in their potential. Because at this point, what they are doing is online retail industry, but their future revenue comes from AWS, which is a cloud service, and uh, cloud service, and like what else did they have? Uh, they had something else. And the main point is retail business is not the only one that they provide. There are other three industries that they try to do it, and they are the ones that make them earn more money. Okay. Anyway, okay. Let's get back to article. Here it says e-commerce, cloud computing. Oh yes, there you go. There's the advertising. Retail may come with low margins, but Amazon will account for 40% of online sales in the US this year, giving it more than 5 times the market share of its closest rival, Walmart. That means Amazon is still better positioned to capitalize on the secular shift to online shopping than its competition. And global e-commerce sales are expected to grow at 13% annually to reach $15 trillion by 2030, according to Amico Research. Better yet, Amazon is becoming a digital advertising juggernaut, due in large part to the popularity of its online marketplace. When US consumers are searching for a product, Amazon is the most common starting point. Like myself, I when I do online shopping, Amazon is like the first website that I go to. It's not just me; it's also American. So when U.S. consumers are searching for a product, Amazon is the most common starting point, even more common than Alphabet's Google search, according to eMarketer. That makes Amazon a valuable and partner for brands. In fact, the company is now the fourth largest advertiser on the planet, and Amazon nearly led the world in the ad revenue growth last year. Hmm. Okay, there you go. AWS. I use this service, and as a web developer myself, AWS is really helpful for me to deploy a website. They made it really easy to use. Okay, let's see. Is the clear leader in cloud computing? Yes, exactly. Another quickly growing industry with high margins. In fact, AWS currently holds twice as much market share as the next closest cloud vendor, Microsoft Azure, and it regularly achieves an operating margin around 30%. That means AWS is poised to be a powerful growth engine in the coming years, as the cloud computing market is expected to increase at 20% annually to reach 1.7 trillion by 2029, according to Fortune Business Insights. Amazon is now 90.55. Okay. So Amazon stock is trading at the bargain price. Given Amazon's strong presence in three large and growing markets, investors have good reason to believe sales will average double-digit growth for years to come. Better yet, Amazon should become more profitable over time, as AWS and advertising services are growing more quickly than its retail segments. So, what people know of Amazon is retail services, but uh, the real business is AWS and advertising services. Hmm. And with that in mind, shares currently trades at 1.8 times sales. 1.8 times sales, which is crazy. A discount to the 3-year average of 3.7 times sales. Hmm. It's a huge discount, right? In the year 2018, $232.89 billion. 2018. Hmm. So the stock price 90.55 is at the is the price where in the year 2018. hmm, uh in the year 2018 its price was about 90, and now in the year 2022 December 13 its price is 90.55 still. So which means it's a bargain price, right? Hmm. Screaming buy. Investors should jump on the opportunity before it passes. Okay. Okay, I'm done with modifo.com, and let's go to marketbit.com. Mm, okay. BlackRock. Okay. Kathy Wood. There's article about Kathy Wood and article about Chinese stocks and one article about billionaire Israel Englander. Article about what he bought recently. And here it says investors are losing faith in Kathy Wood's art innovation. Oh yeah, here it is. All eyes are on Tuesday's crucial inflation report. Um, Tomorrow is going to be big day, and the day after tomorrow is also important because we'll have FOMC meeting, and that's the day when we have interest rate announcement. Hmm. Uh, and also CPI reports. Mm, Okay, let's start reading it. Okay. Okay, this article is about Kathy Wood, the woman whom I truly believe. Mm. Kathy Wood just warned of another Great Depression if the Fed keeps ignoring these signals. There are three safe haven sectors for proven protection. Okay. Banks, consumer staples, real estate. Wait, hold on. The U.S. Federal Reserve has been raising interest rates aggressively in an effort to bring inflation under control, and all signs point to another hefty hike coming tomorrow. Okay. According to Art Invest Kathy Wood, this could have serious consequences. In a series of tweets last month, Wood compared the current situation to events that led up to the Great Depression. Okay. And three safe haven sectors for proven protection is real estate, banks, and consumer staples. Hmm. Uh, let's just skip this one because I'm not really into it. Hmm. Mm, not this one. Old corporation, Bali Laboratories. Uh, mm, uh, Railroad Corporation. Okay, let's read this one. This one is really interesting. No wonder people hate Kathy Wood these days. Because ever since I bought ARC Innovation ETF, uh, it has never been mm, positive. It's always been a negative. So, okay, investors who bought the deep in Kathy Wood's ARC Innovation exchange trade fund have been punished this year so hard, right? Some finally appear to be losing their conviction. Shares of the fund pandemic era favorite, largely made up of unprofitable growth oriented technology companies, are down 63% this year. While the S&P 500 index has rallied 12% since mid October to it cut its 2022 losses to 16%, Miss Wood's flagship fund is hovering near a 5-year low. 5-year low, okay. Hmm. Oh, okay. Three largest holdings in the fund are Zoom Video Communications and Tesla and Exact Sciences. Okay, Exact Sciences. It's something that I've never heard of. I also invested a lot of money into Zoom Video, but not a single one in Exact Science. Hmm. Okay, shares of Zoom and Tesla have lost about half their value this year. That's right. While Exact Sciences, unprofitable provider of cancer screening and diagnostic tools. Okay, no wonder why I didn't spend much money on this one. Cancer screening and diagnostic tools. Okay. Okay, she's also been a proponent of Bitcoin, right? So, and Bitcoin has also fallen about 75% from its peak. No wonder people uh lose faith in our innovation ETF. Hmm. Hmm. Okay, I'm now done reading article. Uh, I'll just talk about Carvana for the last time. So Carvana is like the one that gives me a lot of pain. So let's see what Carvana is up to, and then I'll be done with YouTube Live. Okay. There's article about Carvana being the worst company of the year. Its revenue has been growing steadily, but because of lawsuit issues and because of interest rate hike, uh, they don't have ability to pay debt at this point. So I think customers lost the faith in this company. Hmm. There's article about is Carvana really going bankrupt? Carvana, yeah, finest worst company of the year. Mm, not a single positive one is in. Worst is giving up on Carvana, but crisis continues to spook Wall Street. Mm, Oh, there you go. Better buy Carvana versus Upstart. That's an interesting article. Hmm. A lot of people would just automatically think that Upstart is much better one, but there's interesting point of view here. Carvana and Upstart were both crushed by rising interest rates. Carvana's sales of used cars sold out while Upstart struggled to gain new customers and landing partners. Both stocks are cheap, but one faces fewer long-term headwinds. Mm, mm. So we'll have to see. It's outlook is negative, and we'll just have to see. And I don't have any plan to sell this one. Okay, and this is it for today. And I'm gonna see you tomorrow or the day after tomorrow. Okay, see you, Uni.